Alrighty, welcome to another edition of the OptionGenius Show. Today we are talking all about retirement. Retirement, where you just sit back, relax, and play golf all day long.
If you want to.
If you want to. Is that your thing of retirement? Would
No,
you do that?
no, no.
No?
Maybe for my parents, yeah, but no, not golf.
No.
No.
We have Denny in the program. He plays
Yeah, he's
golf
he's heavy golf.
every single
Yeah,
day.
every
That
day.
he loves it. He loves being retired. He plays with his grandkids and he plays golf every single day. It doesn't matter where he is, whether he's at home or he's at his second house in Hawaii,
Yep.
and he loves it.
Hey, I mean, there's something for everybody, right?
There's
You just got to
something for
find what you
everybody.
really want to do.
So, how do you retire using options? That's what we're going to talk about today.
Yeah.
Um, but markets seem pretty calm today. There was a lot of news yesterday with the interest rates on the bonds and the treasuries going super, super sky high.
Yeah.
And so the Treasury, the US Treasury, had to step in and they said, hey, we're going to buy back a lot of this debt. So that pushed the rates lower. Now, who knows how long that is going to last, but for now, it's a bit calmer.
It's a
And
little bit like kicking the can down the road a little bit, and here we
you're
go
kicking the
again.
can down the
Yeah.
road, and really it's just a matter of the debt. Like more and more debt, the more debt the US has, the more treasuries they have to sell, the fewer people there are to buy the debt, and so the
Hmm.
higher you have to push the rate to sell it.
Yeah.
And the more
People
interest you
want
have to
that. They
pay.
want more, right?
The more
They want
interest
the
you have
yield.
to pay. And right now it's like who's gonna buy all this debt, right? You have the number one buyer, foreign buyer of US debt is Japan.
And we've already seen that they don't want to.
We've seen that they can't buy anymore. They're trying to get rid of them. That's why we had to help them bail out the yen, the currency. Then I think the second largest is South Korea. And for some reason, Mr. Trump decided to cancel or really put a kibosh on the joint military exercises with Korea recently. He couldn't cancel them, he said. It was too late to cancel, but he made it a much smaller affair than it normally is every year.
Yeah.
So I don't know why he's poking that bear. Um,
I mean, just when we forgot about North Korea too. It's like
or South
a
Korea.
little bit,
I'm
you
saying,
know?
I meant South Korea. Sorry, South Korea
Yeah.
is what I meant. I don't know
Yeah.
if I said North, but and then I think earlier today he said that he's actually going to go visit North Korea again. North
Yeah.
Korea.
Hmm.
So okay, tell them to buy some of our treasuries. You know, like stop making nuclear weapons. King Jong
Yeah. I
buy some
mean,
treasuries. Oh my goodness. So all of this stuff is happening, and markets are racing maybe I mean, they're higher today a little bit, but they're slowly, slowly moving back to all-time highs, and everything, the debt just keeps getting larger and larger. Rates are going higher, but the stock market doesn't seem to care.
yeah, it's a little bit scariness to
It
that.
pulls back, goes up, pulls
Yeah.
back, and now they have all these analysts from the different banks saying that S&P is going to be up at 8,000 at the end of the year, or 8,100 or higher.
I mean, it's possible.
So it's just going to keep going, even though we're in a midterm year, right? Midterm elections are coming up. We do have September coming up when all of this could come to a scratching halt. We do have a Fed meeting in September. Nothing until then, but we'll see what happens.
Yeah, I think the Fed meeting minutes were just released at 2 Eastern.
Yes,
So
yes.
like a few minutes ago.
Mm-hmm.
So
Yeah.
that's a
So
potential to move the market a little bit.
yeah. So let's yeah, it hasn't moved at all. Market hasn't moved at all.
Just
So
a little bit.
uh I guess nothing major came out of that. But really it's, they told us this is a little bit more about what was said during the meeting,
Yeah.
right? Now, we're talking about like retirement today because that's what everybody, that's why we trade,
Hmm.
right? We want to earn more money so that we can live the life we want to live. And everybody, at least, you know, before I think our generation and a couple of generations before us, we were all told to go to college, work hard, our I guess our forefathers or our fathers, whatever, worked at the same company for years.
Yep.
We kind of bounced around a little bit. We didn't do
Yeah.
that as much because the
They
pensions
got a
went
watch.
away.
They got the watch, right?
They got a pension. They got That's a
Yeah.
pretty cool thing, but the pensions went away, and so we had to take care of our own retirement, and so there's less loyalty to the company. Um, but that's getting worse and worse every year. Now, the kids are like, why am I'm not loyal to anybody, you know? If you don't give as a company, you don't give me what I want, I'm out of here. I'm going somewhere else.
Yeah. Hour by
Like
hour.
I was, I saw an ad that there's an ad online. It's like, hey, um, I'm going to teach you. There's this guy, there's a coach or something. He's like, I'm going to teach you how to get 5 virtual jobs at the same time and have AI do all the work for you so you could just sit back and hang out on the beach.
Yeah.
Like, what? You're going to have 5 virtual jobs and AI is going to do all the work for you. That sounds so nice. But he's so fake. Like, yeah. I mean, who's gonna hire you and not figure that out, right? That you're not working full time. I don't know. But there was a recent survey done by a company called Thrivent. It's a financial service company. The 2026 Retirement Expectations Survey. Half of all working Americans doubt they will ever retire. So, according to the survey, 47% of workers doubted that they will be able to retire completely. Only 58% thought that they'd have enough money to retire on schedule. And 36% said that they are going to have to keep earning money in retirement. And so, to me, that's not like retirement, right? Because to me, retirement was I got enough money. I
Yep.
don't have to work. I'm done. I'm stopping. I can do whatever I want. I don't have to work anymore. And
More
so,
importantly, to last the years that you want to live, right?
exactly. And the money
Yeah.
will last. The money
Hmm.
continues to last. Now, that's the problem I have with this FIRE movement, the financial independent retire early.
And there are
Um,
many different fires, right?
there's
It's
different
not one.
versions of
Yeah.
it, yeah. But most of them are like, you live as cheap as you can. You save as much as you can. You put it in a S&P index fund or something like an index, passive index, and then you live off that. But for most of them, if you look at all the gurus in the space, they all make money with their books and their blogs and their speaking. None of them are like real fire. Like they haven't retired. They didn't stop. And they're like, oh, that's part of the thing. You have the ability to stop, but if you do stop, then you're living below the poverty line, So
Yeah.
you're like
Yeah.
a government handout. But if you otherwise, you have to keep working and doing all this other stuff. So they're selling courses and they're selling books and they're peddling themselves and they're making a living with this other stuff. So they're still working. And so to me, that's all like counterproductive, or that's like where you say one thing but you do something else.
Right. You'd surely be done. You wouldn't be promoting all that. That's
Exactly. You would be off on, traveling the world and doing whatever you want. So to me, fire, yeah, it's great, but it misses a lot of things. Number one, I don't want to be scrimping and saving my whole life. I like driving. I want a car. I don't want to have to go biking everywhere. I don't
yeah.
want to take the bus.
Hmm.
Right? I want my kids to go to a good school. I want all the things that we have as we enjoy our life, because what's the point of living your life if you're not gonna enjoy it
Yeah.
while you're some saving for someday I'm going to retire.
Right. And then
And
you get older and you realize that someday may not be
it might
there.
not be there, yes.
Right?
Or it might not be the way you want it. Like you get
Yeah.
sick and now you're like, okay, I can't do anything. I got all this money, but I can't go anywhere.
Yeah.
And so that reminds me of a book that I read recently. I forgot the name of it, but it was about the phases of retirement. And according to the author, there's three main phases. So there's the first phase, which he calls like the honeymoon phase, right?
Mhm.
So
Yeah.
you retire and you're done, you're out of work and you're like, okay, bucket list time, baby. It's
Yeah.
like, oh, I want to do this trip and I'm going to go on this cruise and I want to go see the grandkids and I want to go see the Louvre and I want to go chase the Northern Lights and go climb the Machu Picchu and I want to do all this stuff. And so the honeymoon phase lasts for maybe 2, 3 years after you retire because you have the energy, you have all this pent up, this just like I just want to go out there and do everything that I haven't been able to do.
Yes.
And
Because you
so
sacrificed, right?
and
So
you
long.
you sacrificed.
Yeah.
And so you spend a bunch of money in that first honeymoon phase doing everything that you want to do and checking off all the lists. But eventually you get to the point where you're like, man, if I see another museum, kill me. Right?
If I have to go through the airport one more time,
I
kill me.
was like, I
Yeah.
can't do this anymore. And so then you move out of the honeymoon phase and you get into I guess, like the puttering phase, right? Where you're like, yeah, I just want to stay home. I want to do some gardening. I want to do some woodworking or pick up a hobby or whatever. But, I don't need to travel anymore. I don't need to go run around. I'm happy just living my life, doing calm things, doing everyday things.
Yep.
And so at that space, you don't really spend a lot of money. You're doing your little hobby, you're painting or whatever, but you're not traveling as much. And so that's like the puttering phase. And then after that comes I don't know, I guess I'll call it the Wheel of Fortune phase, right? Where basically the whole point of your day is to watch Wheel of Fortune when it comes on at night, right? Other than that, you're just sitting around being bored, sending TikToks to your kids or your grandkids, like, oh,
Learning how to text.
yeah, learning how to text. And so you're just sitting around watching TV, screaming at the TV, at the politicians, and then watching Wheel of Fortune, and then going to sleep at like 8 o'clock. That's like the final phase,
Right.
the Wheel of Fortune phase. And so the guy was talking, he's like, we're saving up all this money, but we don't realize that we're not going to spend all of it equally. So we're going to spend most of it in the beginning, in the honeymoon phase, and that's okay because the other two phases are not expensive unless you get sick. Like in the last phase, you could get sick, and that's where a lot of money could be spent.
Yeah.
And so you have to balance that part out. So I thought that was pretty cool, like how he thought about it. But like for me, I've always wanted to retire early. Like I think I don't want to work till I'm 65. Um,
Yeah. I mean, get it done, right?
yeah, I just wanted to get it done. I wanted to like, I read all the books, the Rich Dad, Poor Dad, like, okay, you got to go buy real estate and you got to do this and you got to do that. And I've tried all that stuff. It hasn't really worked out for me.
Yeah.
Real estate has not. Other things have not. The only thing that's really worked is options
Mhm.
and selling options specifically. And so, that got me to the point where like, you know what? Okay, I guess technically I'm not retired because I still have to trade. So I'm not technically retired. That's still my job, so to speak.
Yeah. Mhm.
But I have enough free time that I could do other things like run OptionGenius and do the show and all this other stuff. So um, for that regard, I am very blessed, very happy that we have that. And I'm looking at the survey and it's like, it's pretty sad.
It's depressing. It really is. And it's a huge problem getting worse.
Yep. And, so it's like you have all these people that are like, okay, I'm not going to be able to retire, but I'm getting older and I can't do as much as I could before. So what am I going to be, the greeter at Walmart? Am I going to sweep the floors at the movie theater? What is my job going to be? Like, what am I going to do? And then a lot of them, and we talked about this in the passive trading book, a lot of people, they cannot work. They get something, something happens to them where they are unable to work before even retirement age. So
Right.
they don't even get there. Now, it might not be that they might get sick or somebody in their family gets sick that they have to take care of or they have to help out or, something happens um, and they have to move or do something and that it's something out of their control where they can't even work until their retirement age. So they have to make whatever money that they have last. And most people don't have anything saved either. So it's you know, it's a really crazy thing. And part of it is that people do not even, because it's so scary, people don't think about it and they
Right.
don't prepare for it. So like most people in the survey, right? They ask them like how much money do you think you'll need to retire in comfort? Like if you were to retire and you were to live okay, how much money do you think you would need?
Yep.
Let me ask you, what do you think? You have a number? Have you looked at it?
I would say I'd say about 2 to 3 million
2 or 3 million?
days. Yeah.
Yeah.
Yeah. I think that
So
would be probably it's depending on the lifestyle that you want, right?
exactly. And
Of
where you
course.
live
Right.
and how, all that stuff. Um, according to the survey, only 23% were able to pick a number,
Yeah, they have no idea.
and they picked 1 million.
Yeah.
So, I mean, I guess with Social Security and 1 million, now if you have $1 million and you're using that 4% rule, right? Where it's like you can only take out 4% of that, that's $40,000 a year.
Right, which is I mean,
I don't know how you live off of that.
yeah, that's gonna be especially these days. I mean, that's not
And
gonna go very far.
yeah. And
Yeah.
I mean, yeah, sure, you got Social Security and Medicare, Medicaid, those, but still,
And we've been
yeah,
hanging on that number forever. That's been the kind of point, right? That
yeah.
most advisors just say to you. They just say it to you when you talk with them. That's what they say. Oh yeah, well, 4% withdrawal rate. And you're like, wait a minute. That's that's not gonna do it.
Hmm.
But they just glossed by that answer.
Yep. And so, um, even the $1 million number, that's what most people think, but people don't have anywhere close to that,
Hmm.
right? So according to the survey, it's like among people in the top 10% by net worth. So this is the top 10% of the people in this country. More than 90% of them have retirement accounts. So the rich people are thinking about retirement. The median balance for the top 10%, what do you think it is in their retirement accounts? How much do you think they have? The top 10% by net worth, how much money do you think they have in their retirement accounts? The average, median.
Average. I'd say between 150 $200,000.
Well, they have 900.
900? Okay.
900, 900,000. But
I
again, this
undershot.
is the top 10%.
Yeah,
This is the top 10. This is like not the 90% of the bottom. This is the
yeah.
top 10% have 900. So they don't even have the million that you would need.
That's pretty amazing,
And that's the
I
top
must say.
10%. So
Yeah.
like who's going to retire? Like the top 2% are able to retire, right? Um, and so, and then they give you like these tips, right? Oh, 3 savings retirement tips. Make sure you save some money every year for retirement. Oh, thank you. I didn't think of that, right?
Yeah.
Oh, okay, cool. Consult a retirement planner. I mean, that's a great idea. You have a financial planner, at least you can um, have some idea, have some numbers, have a plan, so at least you're thinking about it, moving forward. You're not
Hmm.
just hiding and hoping it'll go away, which it
Yeah, there's a
doesn't,
lot of bury your head,
right? And then the third is to save for emergencies.
which
Cool.
I would argue is the hardest thing for people to do. They can't even do that.
No,
What's the
no,
stat with most Americans don't have $400 for an
yeah,
emergency?
exactly.
Can't do it.
Yep. And according to Investopedia, the average US family should have $35,000 in emergency savings for emergencies. So you should have 35,000 set aside just for emergencies. That's like your heart attack, your car accident, something.
Yep, where
Um,
you don't have to hit that credit card.
yeah, where you
Most
don't
people
get
do.
really behind. I remember in a past life, I was a real estate investor where I would buy foreclosed homes. Like people that were going into foreclosure, I
Mhm.
would try to buy the home from them before they went into foreclosure. And so I would go and I would meet them at their homes. And I was surprised when I what I learned. You would think that most people in foreclosure are negligent, they're unorganized,
Bad
they're
credit history,
they're just deadbeats,
it's a
right?
mess.
They're
Yeah.
like, "Oh, you're not paying your mortgage? Come on, man. That's, you're gonna be out on the street. Like, what's wrong with you?" They're probably on drugs or they can't hold a job, or they're drunks, or I was all thinking all these negative things, but that was not anywhere near the truth. The majority of people that I talk to, and the stats, they back this up, that the most majority of people that are going into foreclosure, it's because of a accident, like a medical
Yeah,
accident,
I was
a
about to
medical
say
reason.
something related to
It's
health.
something health wise.
Yeah.
They can't work anymore. They have to quit their job. Their spouse has to help them. The spouse maybe loses their job or can't work as much, or it's a child that gets sick.
The
You know,
stress through the whole family.
yeah. I
If you
remember
even have
one.
family, right? At
I
that point.
remember, yeah, I remember one family. The guy was a truck driver. He was a long haul truck driver, and his wife took care of the kids, right? And he was doing fine until he got into an accident, and he just couldn't work. His back would not allow him to drive anymore. And he had a settlement. He got a settlement for a little bit, and that lasted. But now the settlement was done, the money's gone, and they're like, they don't know what the heck to do. And it's so sad. It's like, how do you, where's, richest country in the world, and we have this type of issues where it impacts everybody. And so, if we have AI coming
Uh,
and somehow they have a figure it out where everybody gets money from the government to survive, I think that'll be helpful to a lot of people. Uh,
it's going to be very interesting,
but
to
I
say
mean
the
that
least.
that might be the answer to this retirement issue, you know?
But we have to create that world of abundance that they're talking about, right? So it's for deflation to occur, for that to happen.
Well, yeah. So all the governments cannot be maxed out on their credit card bills,
Yeah.
like they are, which is what we were talking about earlier. Like,
Yeah,
oh,
I
the
mean,
rates are
judging by
going
them,
up.
they're not doing all the things that they require or suggest an individual do, right? They're just as bad or worse.
Yeah, all of them.
All everyone.
Uh,
Yeah.
and so it's a situation that is not getting any better, but luckily we teach people how to trade options, and you get to a point where you realize that, okay, look, all of the normal advice on retirement
Hmm.
is great for certain people, is usually not great for the person trying to retire. But it's great for the person who is planning the retirement. The retirement planner is usually great for the people who are managing the money because they eat the fees no
Yep.
matter what. If it does good or the retirement or the investment does bad, they still get paid. So
It provides for them,
it
not
does.
necessarily you.
It
Yes.
does give them a very nice retirement. And so, um, if you just look at the fees that you're being charged, before it was mutual funds, now it's ETFs, and there are other, fees that the financial planners charge you. More and more people are learning about it now. The word fiduciary, people never heard of that before. But
Yeah.
eventually, now I think a lot of people understand that the word fiduciary means that the person has to look out for me, right? As if I'm their client, that planner has to look out for me first. Whereas before, they didn't have to. Like if the
Yeah.
person is not a fiduciary, the one that's planning your retirement, they don't have to look out for you. They just have to look out for what could be good for you. And so if they put you into a ETF or a mutual fund or whatever, an investment that has very high fees, that's fine, perfectly legal. And so they will do well, but we don't know how well you will do, which sucks.
Yeah.
So, we say it all the time. Nobody cares about your money more than you do.
And
And so,
unfortunately, most people care about that in um, that meaning of that word in down markets and down times, right? That's when you really start paying attention to it.
yeah,
Um, so
yeah.
yeah.
And so I have the little OptionGenius investment calculator that I wanted to show.
Hmm.
Um, and let me go ahead, share my screen and put it up there. This is something that we do in our presentations, in our live events, and it really opens people's eyes, right? So we have a passive trading wealth calculator, and then we have the financial independence calculator. So let's take a look at the financial independence because this is more like retirement.
Hmm.
So we can use normally we do this with a volunteer, like a live
Yeah.
volunteer. We bring them
Yeah.
on and, it's like, okay, hey, what are your numbers? But yeah, we can make up anything. So like, if you were to retire today, make up a number, Matt. If you were to retire today, how much money do you need every month to live off?
All right. Let's go. Let's go. Let's go 7 grand a month.
Seven? Okay.
Yeah.
Seven. That's a little low, I think. Most people
All
probably
right.
aiming
Let's
for a
go
little bit
10.
higher.
Let's do 10.
10. All right,
I'll
let's
go
do
10.
10. 10 would be 120 a year. All right. Now if you need this money, right? Um, Obviously we have to uh if you're looking at the 4% rule, right? That's 120,000 a year. Oops, 120,000. I keep messing up. All right. Divided by 0.04, you would need $3 million at the normal 4% withdrawal rate. $3 million. Now, most people not getting there,
Yep.
unfortunately. And so what we've realized is that you don't have to have the nest egg of $3 million if you can actually get more out of your money.
Hmm.
Right. So if you don't just make 4%, if you can actually do better than 4%, then you don't need as much money.
That's right.
And so, the stuff that we teach, the options that we teach, the passive trading, the selling of options, the way we do it, we can make, 4% in a month or
Very
more
doable.
or less. So realistically, what percent do you think you can make every month by selling options? Like, based on your history, you've been doing this for years on a monthly basis. If that was the only thing you were doing, right? You're just focused on your portfolio. You're like, okay, I want to be safe. I don't want to risk a lot of money. But I need to make a little bit. How much would you make on average?
I think it's very doable. 5 to 10%.
A month?
Hmm.
Yeah.
I
Okay.
do.
Yeah, that is, I mean, it's doable for sure.
I
I
see it
would,
then. Yeah.
but can you do it every month, month after month after month for years?
Yeah.
Okay. All right. Well,
Yeah.
I would say, my friend, that's why you are a coach. Because I would say that's for most
I
people,
knew you
that's
were
going
going
to
to go
be,
lower, but I mean that's the truth.
I mean, hey, I asked you a
Yeah.
question, right? What
Yeah.
can you do? What are you doing? And you're using your experience, and that's why you're here. Um, I would probably go a little bit lower. And I think that
I think you're
even
going to go like 1 to 2.
I would say 1 to 2. Like,
Okay. I knew you were going
if I'm doing just a basic covered
Yeah.
call, right?
Yeah.
Really safe, conservative covered call, I'm going to make like 1%. If I'm doing like a cash secured put, I'm going to make somewhere around two, somewhere, depending.
Right.
So like I like to go usually with 2% a
I
month.
knew you were going there, but yeah, I just wanted to have you.
That's
Yeah.
24% a year. I think that's
Hmm.
pretty doable. And even if people are not selling options, you might get lucky and the market might go up 24% a year. Um, maybe, maybe not. Like it has
Yeah,
couple last
maybe a
couple of
few
years,
years in
but
a
then it'll
row.
also go down. So
Yeah.
you have to tie that in because like we don't make money every month, right? So
Mhm.
it's like okay, I'll make 5% 1 month, 2 months, 3 months, 4 months, and then I might lose 10%. So my overall yearly return will be less than that on average. So I'm going to go with two. And so if we need to make $10,000 a month and we are making 2% every month, we need an account of $500,000. So literally today, if you had $500,000 in your account and you knew how to make 2% a month, which is, I mean, we'll teach you that.
Yeah, very easy. Yep.
You
I want
can
to say
make,
I don't want to use the word easy. Yes,
yeah,
doable.
it's very doable.
Yep.
And you can make $10,000 a month. And yeah, it's just like, okay, so we looked at earlier, if you do the 4% rule, you need $3 million. Most people are never getting there.
No,
500,000 is a little bit more doable, right? But let's say you don't have the 500,000 right now. Let's say you have less. Let's say you have, I don't know, what are we going to do? Like 100,000?
sure.
Yeah. So let's say you have $100,000 right now. And is that 100? There we go. 100. And you can add some money every month. No, let's say we don't add anything. Okay. And we're making 2%. So how long will it take us to go from 100 to 500? How long do you think?
That's where I need a calculator.
Just guess.
3 years. I don't know.
I think it's going to be about 4 years, maybe.
Yeah.
6.9. Okay.
Ah, a
So
little.
so a little bit longer. 6.9 years. If you had $100,000 today and you make 2%, which again, we said we can do,
Hmm.
it would get you to $500,000.
It's very powerful.
And then at 500,000, you're basically done because all you got to do is just make 2% every month for the forever, right? And you'll make more than 2%. Sometimes you'll lose, sometimes you'll make less, but on average, 2% is the goal. And that is doable with conservative strategies. And so anybody that has $100,000 right now in less than 7 years can retire with an income of $120,000 a year. So you have 100,000 now, and 7 years from now, your income will be 120,000.
Yep.
So that's like, you know,
Super,
that's pretty
super
big.
powerful. Yeah.
That's super powerful. If you can make more, the numbers get crazy. Like let's say if we go to
Very quick.
4%, 4%, you just need 250,000. You can get there in 2 years. You can make 4%. What if you make 1%? And you go a little bit more conservative. You need what, a million? Yeah, you need a million, and it'll take you 19 years.
So if you have somebody seeing that, which is super powerful, just here on its own right, if you have even a younger person, it gets crazy, right?
Mm-hmm. Yep.
So it's you flip the whole script.
Yep. Yep. I mean, we do layups, which is our version of the credit spread, and
Hmm.
we aim to make 10% a month, right? On our iron condors, we're trying to make 10% a month. On our oil trades, we're trying to make 10% a month. On our naked puts, our covered calls, we're trying to make less, but you can make more, right?
Yep.
If you're more active, if you do it a weekly instead of a monthly, you can make double
Hmm.
what you can make on a monthly option. You just have to put a little bit more time in. And we teach all this stuff. It's like it's all
Yep.
there. It's all here. Just
It's
take
all
it.
there. Yeah.
So I'll take it. We'll show you the trades. We'll show you exactly what we're doing to get it. Um, and so it's phenomenal. My account right now, my larger account is $500,000. And my goal is 10,000 a month, you know? And it's like, yeah, it's doable. I've seen it. I'm doing it.
Yep.
So,
I do it all the
um,
time.
yeah, and it doesn't take very long either. So the fact that,
It's a skill that you need to learn, right? That's why
yeah,
we teach it.
You have to, I mean, we just got to get the word out there and people need to understand it and do it. And that's about it. That's what it comes down to. So, um, I don't, I'm at a loss. You know, and then this is like, we're talking the super conservative, like super conservative,
Yeah.
right? We can head over and say, okay, hey, like if you want to play in the deep end, right? How about we take a look at market power? And then
Hmm.
the numbers over there are astronomical, right? Um, just looking at the automation numbers
Yeah, I mean, you're
for
turning over that money
like,
exponentially.
yeah.
So,
And
yeah.
so, you know, if you had $100,000 in the I can even look at it right now. According to the templates that we had, so based on the track record of the last 4 years, 4.5 years, the $100,000 account would have generated over the last 4 years $73,000 a month.
I think you'll
Seventy-three
be fine.
thousand. Sorry, not a month, not a month, a year.
A year. Okay.
Seventy-three
I was like,
thousand dollars
oh,
a
okay,
year. No,
that
not a
sounds a
month,
little
not a
bit.
month. That's no,
Yeah.
but $73,000 a year off of a
Hmm.
hundred thousand, 73% on average.
Yeah.
Now every year is not going to be that, so you might make half of that, but that's still freaking phenomenal. So, and that is with a conservative figure with a drawdown of 14%. You know, 5 of 5 years were profitable, and
On one strategy.
on the four different strategies that
Four
we have in
different.
the
Yeah. Okay.
automation. Yeah, so you're mixed in all four strategies.
Gotcha.
Um, but then you have something called risk of ruin, right? Which is like, what's the worst case that could happen if everything went bad? If all the trades went bad at the same time, what was the worst case that could have happened? We would the chance of our $100,000 losing half of it was a quarter of 1% in any 12-month period. So even being down 25%, you only had a 6% chance of losing 25% in any 1 year. So that kind of tells you, okay, what does that mean? That means like it's really safe the way we have
I mean,
structured this portfolio.
you could take that money and put it in index fund and get cut in half.
Yeah, you could,
You
right?
could.
And because of the way this portfolio is designed, the different strategies, how they work together, it's more diversified than an index fund in a sense. Because the risk of ruin, I don't know what the risk of ruin is on an index fund. I've never looked at that. Where okay, what's the chance of it dropping 50%? But it's always there.
Yeah, it's always there.
It's always there. And it's
And
not,
it has happened. I mean, accounts have been cut in half easy.
yes. Yeah.
I mean,
And
just think of COVID
yeah, I mean, you could be down 10, 20% just like that.
like that.
So,
But somehow we were conditioned to be like, oh, that's just safe, you know? It's really
yeah.
how safe is that?
And if you don't like that, then you should put it in treasuries, and make 5%, 4% a year.
Right.
And that's where they get that 4% rule from. If if you're getting it from treasuries, that's all you're making. And so,
To me, that's like a safe death in a way, though. It's just part of it, yes, part of your money being in treasury is fine, but how
and
are
then
you really going to make the money you need to make?
you have all of the gold bugs and the crypto bugs, and they're all talking about, well, there has never been a time when there was a fiat currency that didn't blow up,
In history,
in history
true,
and
true.
throughout history. So
Yeah.
it's like, how long will the US be able to keep borrowing money and keep extending it and kicking the can down the road, making their deficit bigger and bigger, and the budget go negative and keep spending and keep borrowing and keep borrowing and keep spending before it just goes boom.
I know. What do you think of that?
I have no idea.
I
I
don't
have
think
no
anyone
idea.
really does. I mean, we're in that experiment right now.
No, and I think that is why all of these politicians are praying with their hearts that this AI stuff actually works, because if it does, then productivity can raise the level where
Yeah.
it can maybe turn it around, where, they don't have to borrow
I
as
think they
much.
need it to hang around, right?
They have to. They don't have a
Yeah.
choice
This
because
might be the biggest bet in history.
it cannot keep going like this.
No.
Eventually it's going to blow up, and you can read Ray Dalio's books on this stuff and other people's books on this stuff. And I mentioned Ray Dalio because he's not a nut. He's not a gold nut. He's not
No.
he just looked at history, and he's like, looking at all the empires in the past, this is the path that they go on, and this is what happens,
He's
you
like
know
a master hedger in my mind. If this asset goes down, I'm in this one. If this one goes down, I'm in this one. I'm in all of them, right? And
uh-huh.
his all-weather portfolio, and I think that's very smart, right? To some degree, because we don't know, right? This is where this all heads. No one knows, right? And if they say they do, they don't. And I just don't see it as a U.S. problem. It's a global problem,
It's a
right?
global
It's a
problem.
global
It's
problem.
getting worse. And if people think that their stock portfolio is going to save them, it's not.
Yeah.
And that's one of the reasons why the US government is so hell bent on keeping the dollar as the world's reserve currency. You know, I would probably say more than 50, 60% of the prosperity of the United States over the past 50 years has been because the dollar was the reserve currency after World War II. Everybody has
Yeah.
to work in dollars, everybody has to trade in dollars, and that made everything here cheap. Now, you take that away, and everything just gets massively more expensive. People are not borrowing dollars anymore, people are not buying treasuries anymore, and the whole economy could collapse,
Yeah.
especially with all
I
the debt we have right now. And we've been talking about it on this show. People right now are super heavily margined. That's just retail traders and institutions heavily margined. That's just in the stock market. Then the personal debt is at record levels. Government debt is at record levels, both on the national level, the state level, the local level, the city level. I mean,
I
just
mean,
there.
just I don't think people realize how interconnected everything is. I mean, just the fact that you have to go and bail out Japan, right? It's not because we love Japan, right? It's we depend on them having
Yeah.
to buy our treasuries. A
Yes.
lot of people don't understand that. I mean, they don't. Not that I expect them that they would. But as you get and start peeling the onion more and more, you're like, oh, everything's connected, and the problem is getting bigger. So yeah.
Hmm. Yeah. So interesting. So for those of you who are watching and have worried about retirement, you have a right to be, but there is a way. There's a way to help yourself. And I think, I've tried lots of different ways throughout my
Yeah, I
life.
mean that's how I got led to do what I do, right? Is trying to figure out this puzzle. And to me, options are the best way. Um, Especially the time freedom that it gives you, right? There's nothing that I can think of that will achieve that.
Yeah. Not only do you
The
have
level that
the,
we do.
not only do you have the ability to make more and passively, but you have the freedom of time where you don't have to sit there and like, click, click, click buttons all day long,
Hmm.
right?
And
It's
you're in
like,
charge of your decisions,
yeah.
right? And I mean, frankly, that's scary to some people, but these skills are there for you to learn. Anyone can do this. I mean, it's just like getting that through to people. And
No,
I
but
think the calculator is a wonderful way to show the possibility of that, right? That it is in reach and is doable um, for the common person.
hmm I mean, you can live anywhere in the world, right? Nowadays, the Nasdaq, I believe it's the Nasdaq, in December are now going to 23-hour trading.
Yeah.
So they're going to be
Well,
open. They're going to be open all day long, all night long. So anybody around the world can be trading Nasdaq stocks. I don't know what that's going to do to liquidity at night, but you can live anywhere in the world and be trading. You can all you need is a laptop. You don't need employees. You don't need inventory. You don't need marketing. You don't need all this social media. You don't need anything. Just you just need a laptop. Or a phone. You can do it on your phone to some degree,
Yeah.
right? Have a little bit of education, and then once you learn the skill, I don't think these options are going anywhere for decades. So you just keep doing it, and it's that's I guess the boringest part. It's like you do the same trades over and over again, like
Yeah, I
over and over
think
again.
as you say that, it reminds me of a time when I remember doing my like one of my first options. I did it on the beach, right? A little rental we had down in the Tampa Bay area. And I was like, "Ah, you conceptualize that it's possible, but actually hitting the buttons for the first time, looking at the water and being like, wow, that just worked. It's I mean, it's a crazy idea, right? That you could be anywhere doing this. And
Yeah,
that it didn't really hit me until you actually hit the button and went through the process and actually be there. For whatever that's worth, right? It just seems like a thing in pie in the sky, right? Until you actually do it.
yeah.
Uh,
And a lot of it is just numbers, right? So we don't
yeah.
realize this is real money until you
Mhm.
take it out. You're like, oh wow, I got the. It's like
Yeah.
I pressed a button and I made $300 selling this one option. Like what?
Mhm.
That's mine? I get to keep that? Like wow.
I look at like you have an engine, right? And that's your savings, and it's up to you to harness those savings, right? And grow them and nurture them. It's kind of like watering a plant, right? You got to nurture it, take care of it, watch it. Um, Same thing applies to
And
your
nobody can
money.
do it. Nobody's gonna do it better than you. Like nobody
Nobody.
cares more than you.
Yeah, absolutely.
So even if you do this, and even if you screw it up over and over and over again, you can still come out ahead.
Hmm.
And you will come out, you can come out better than the people who are just putting their head in the sand and being like, okay, I don't know what to do. I don't have any savings, or I give it to all to my financial planner and hopefully it'll work out.
Well, we always said hope is not a strategy.
Yeah.
It really is
So,
not.
so
Yeah.
it's yeah. But and then when we're talking about retirement, like a couple of years ago, we took a family trip to Colorado. So we went to Denver, Colorado Springs, Boulder, that whole area. And we were there for like 2 weeks, I think 2.5 weeks or something. And it's beautiful up there. Like it's gorgeous, you know? Like I remember we come out of Walmart and there's just a mountain
Yeah.
just right there. I was like,
Yeah.
whoa, it's
A
like a
little different than Texas, right?
yeah. I mean,
Yeah.
it's like you're living in a postcard. It's
Yeah.
like you just come out of Walmart, mountain, snow-covered mountain right there, like incredible. And so I was like, man, this place is so great. And one day I'm just, we did all the fun stuff. We took all the kids on doing everything. And one day we're just sitting on the porch and the weather's beautiful, so I'm just hanging out outside, enjoying myself,
Yeah.
you know. And I'm thinking to myself, okay, this is awesome. Like this is one of the best trips I've ever been on. And I love the weather. I love the place. We've been hiking and boating and this and that and zip lining and horseback riding, all this stuff. And then I was like, I couldn't do this for the rest of my life. Like I could not, if this was my life every single day, I couldn't do it. Just having nothing to do, like being able to go do whatever you want, but not having anything concrete in a sense where I'm
I
not.
think we're all different, beings.
Yeah, of course. I'm
Yeah.
just saying my story, you
Yeah.
know. But I was like, I need to accomplish something in a sense. I need to
I
make
think most people do. And
I need to
that's,
make a contribution somehow.
yeah.
Just being about me and just being horseback riding and zip lining and blah 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 every day, that's fun for a little bit, but I need to work. So for me, I was like, okay, it was a big epiphany, because I had always wanted to be like the guy that retired early and just hung out and did nothing, right? But after that trip, I was like, I need to not. That's not my path. I'm gonna get totally bored out of my mind.
Yeah. There's a book that I read a long time ago, because I was always interested in retiring, the idea of retiring. And the book was specifically, what do you do when you retire? Right? No one answers those questions, right? That you're pondering there. It's like we work so hard to get up to that point, but there's a bigger, fuller question of your life. What are you going to do when you get there? Right? And it's important for everyone to think that through, right?
Hmm.
Because That's why you have so much trouble in those first few years. It's like people lose their idea of what they're being, what they really want to do, and who they are, and all sorts of questions.
So they
Which,
say like
brings me back to the other question of, we talk about universal basic income. I think there's always going to be a want for people to work and have a purpose, sense of purpose. So I don't know how that's going to interplay with everything. I don't think anyone knows, right? Of course.
no. And that's why they say that, there's a like once people retire, there's a large percentage of people that just die within a couple of years of retiring
Yeah,
because now they have, like you said, no purpose.
they
You know,
lost
like
their purpose.
what
Yeah,
do I do with my life now?
their sense of self. Mhm.
So,
Yeah, and it's only the question that you can answer.
yeah,
For sure.
yeah. And so I'll give you an example. My father, he's in his 80s right now, and he has his investments and he has income coming in, so he's essentially retired, doesn't have to do anything. What do you think he does all day? He watches markets.
Yeah.
He's still trading. He's still and he's not doing very well. I'll tell you that. Um, but
You have to sit with them a little bit.
a little bit, like he watches a lot of YouTube. So he's like, "Oh, Dad, come on, no, please stop listening to that junk."
There'll
Even
always be
though,
the father-son dynamic, so you can't really fight that so much. Yeah.
so I was like, "Yeah, okay, it's his money. Let him do what he wants." But he stays busy and he keeps his mind active, and he's still learning and trading, and
Mhm.
it's something that you can do for years. So if he had learned it years ago, he could be doing it now and he would be good at it and he would have been able to do it well. But he's
Well, my
learning
mother's
now.
a perfect example. We used to talk about how
Exactly.
we do Trade Talk Fridays. I mean, we still, it's a connection,
Talk
right?
about that. What is that? What does that mean?
So, a while back, I taught my mother and my sister how to trade, right? How to do a few different strategies, how to think about the markets, basically from what I was learning, right? So I wanted to share that with them, right? Um, my mom's, she's in her 80s. My sister is 5 years older than I am. We're in all different parts of the country. I'm in Florida, parents in South Carolina. She's up in Massachusetts. So we would talk for half an hour to an hour every Friday, right? And it was just a way of teaching them how to trade. I said, okay, let's meet up and we'll just talk a little bit about what to do. And it became so much more than trading, right? And it was like offshoots of trading. It brought community, it brought us closer. We end up, before we started going to trading, we're talking about, okay, what's going on? We're more connected than ever through trading, right? So that's one of the side effects of trading, right? Not only are you learning to make money and it's fun to do, right? And you're providing and you're learning a skill, but it also brought our family so much closer, right? And I'll take it even further. My mother's in her 80s. She has some health issues. She used to love the golf. We were talking about golf earlier. That's all she would do. She would just golf, right? She retired. She got the retirement. I'm gonna golf, right? And she did. And luckily she was able to, right? She would play, you know, 18 holes of golf, sometimes more, and then go home and watch the Golf Channel. Okay, that was it. But when she came into some health issues, she could no longer golf anymore. So trading filled that void for her. She loves the trade. She loves the research. It's a perfect fit for her and has really enriched her life. So, and she's older, so it proves the point that anyone can do it, and it's just a world of benefit as a result of trading. So I would say that.
Yep. People start trading. End of
Yeah,
story.
I mean,
And
I wish. I think the first thing is like showing those calculators, right? Showing that it is possible, right? And then people, once they see that, then they go a little bit deeper and have the courage to actually try.
yep.
Yeah.
And if you don't know where to start, we have a book at passivetrading.com. It's free. You just pay for shipping. We'll ship it to you. Teaches you the stories, teaches you the strategies. We showed you with the calculator to make 2%. The book shows you how to do that plus more. There's actually an example in
Right
there.
here.
There we go, passive
There we
trading.
go.
There's a there's even, how do you how I forgot what it was the return was, but the return was more than 2% on a stock that went down in price.
Yeah.
So how do you trade stocks that are actually
Walmart. It was
going
Walmart.
down
Yeah.
and you actually make money and make more than 2% a month? And so it's yeah, it's really crazy. Like I had a friend, he has a fund, a real estate fund, and he pays investors 10% a year, you know? So that's what he pays, 10% a year. And people are giving him millions of dollars because they're like, oh, double digits. Okay, that's
Hmm.
awesome. You know? I was like, yeah, you know, I don't know, man. Like, it's like
Yeah.
I didn't know how to tell him, like, dude, I could do that in a month. Like, why?
Yeah.
Why would I give it to you?
You have to prove it to yourself that you can do it. You
Yeah.
can do it.
So, but that's where you start, passivetrading.com. And if you want, we have the club that goes deeper into it. Links are down below. That is everything you need in all the different
Yeah, the
strategies.
community, we're all in a lot of the same trades. We're
Yep.
talking about it daily,
Yep.
posting, talking about it.
Yep. We're all working our
Yep,
way towards, whatever financial goals that we have. So
that's it.
we don't do it together in the club. Join the club. Cool
That's right.
beans. All right, everybody, that's it for today. Um, we will see you all on Wednesday. And until then, be safe and trade smart, I guess.